What's up, guys? It's Rob here, and today we're going to be talking about CEI stock, Camber Energy, a stock that is pumping up huge over the past 2 days. It's an old short squeeze favorite we used to talk about on the channel, and we are going to dive into it today, talk about all the catalysts it's got going for it, why it might be rising in the future, what to watch out for, and so on. So let's start off taking a look at the chart. Over the past 24 to 48 hours, you can see this stock has been pumping up massively. It's just about doubled in price until hitting a key resistance at $1. Okay, very strong psychological resistance level. A lot of people are wondering, will we be able to break through? Well, there are some key things that you're going to want to watch out for if we're going to be doing that. Okay, the first and the main catalyst that is creating a big price increase in CEI is rising oil and natural gas prices. Okay, because look at what CEI does. All right. CEI, Camber Energy, is an independent oil and natural gas company, okay? So obviously, the sale of crude oil and natural gas benefits from rising prices of those things because their costs are not actually increasing to sell more of that stuff, right? If they're selling that for more, their costs don't increase to do that, right? They pay the same amount they always have. So an increase in price of crude oil and natural gas is very beneficial for them. Now, we have been seeing crude oil and natural gas jump up very high in price, especially today. Oil prices jumped 8% alone just today as Russia invades Ukraine. Ukraine and Russia are very big producers of oil, okay? They are actually, Russia is the world's second largest producer of natural gas and one of the world's largest oil producing nations. So what we're seeing is a situation where potentially there are going to be huge sanctions on Russia. Now, it's currently expected, okay, that we are going to put big sanctions on Russia because of their invasion of Ukraine, and a second barrage of sanctions are widely expected by analysts, although some analysts believe that Western governments will likely exempt energy transactions from these sanctions. So that is something that you're going to want to watch out for, okay? You're going to want to watch for energy-related sanctions on Russia because they are a massive producer of oil and natural gas, and that is the exact same thing that CEI is producing, except CEI, the key part about CEI is that they don't operate in Russia or Ukraine. They focus on areas like central Oklahoma, south and west Texas, okay? That's where they're operating. So they are safe from all of this worry and all of this doubt that's surrounding Russia and Ukraine at the moment. So that's why they specifically are benefiting stock price-wise quite a bit, why they're shooting up in price, because they are an oil and gas producing company, and oil and gas prices are going up. Now, like I said, the second thing you're going to want to watch for is what these new sanctions include. We don't know what they are. They haven't come out yet. You're going to want to watch for energy-related sanctions, though. The next thing, you're going to want to watch overall for further assaults on Ukraine, because this is not a new phenomenon, right? We've seen oil and gas prices going up for the past couple of weeks because of all of these tensions and worries about what might be going on in Ukraine, and what's actually happened now is there is some form of invasion. So further assaults on Ukraine could certainly continue to spike oil and gas prices, create a little bit more worry, and specifically you're going to want to watch out for the destruction of oil and natural gas facilities in Ukraine. If you start hearing about that, then you could be in some trouble, if you're looking to buy oil. But if you already own CEI stock, it could certainly benefit from that, because oil prices would probably be moving up quite a bit if you start hearing stories about oil and natural gas plants getting nuked or destroyed. That's because, then it would be a permanent effect on the oil and natural gas production of Russia and Ukraine, right? Because currently they're big producers of oil and natural gas. You're going to want to watch out for destruction of any of those facilities that could have longer lasting effects than just the immediate conflict that's going on, because eventually all of this is going to smooth over in some way, and the only lasting damage will be stuff that's actually been destroyed. So watch out for oil and natural gas plant destruction. Now, the fifth thing that we're going to be watching for is high open interest option strike prices. Now, this is more of a technical thing. It's not so much a catalyst-based thing, but it is a technical thing that you can watch for, and specifically the February 25th option. So tomorrow, it's notable that there are 22,000 open interest call options at the $1 strike price. Now, it's possible that this could create a type of gamma squeeze, because this open interest call option number is likely not accurate as of most recently. We have actually had about 28,000 options trading just today, and these open interest numbers do tend to update at the end of the day. So we're going to see how many open interest call options there are at the end of today. And the reason this is important is because you could potentially have a gamma squeeze situation. If CEI gets above $1, then basically everyone who has sold these call options, likely institutions, are going to have to start buying up shares of CEI. They're going to have to start covering those call options because people will want to take delivery of those shares. At least some people will want to take delivery of shares. And basically, they'll have to start buying up a bunch of shares of CEI, raising the price up even more if we're over $1 at that point. Now, I would like to encourage you guys, if you are so inclined to subscribe to the channel. All right, we're on the way to 11,000 subscribers. If you want more news about stocks that are doing pretty decently at the moment like this, then feel free to subscribe to the channel. Now, there is another thing that we have to watch out for on this list, and then there's one final reason why CEI may be doing decently in the future, okay? Short interest decreasing. Obviously, CEI was an old short squeeze favorite. In fact, if you look back at the past year, you can see we were at highs of $4.85 when this thing was getting pumped up by Zach Morris, a trader, and was also having an incredible amount of shorts in it. You can take a peek at the Ortex data for it. It had a ton of shorts in it way back then, and eventually those shorts won out. They released a huge short report. It was a huge deal if you were in the stock at the time. I won't bore you with the details, but currently you can see there are still about 28 million shares short, 12.45% of the free float, and that's actually increased today. So shorts are not backing down, but it's interesting to see that there are quite a few shorts in here, and if you do get a couple more price increases in CEI, we'd already have to move up a little bit to actually start squeezing out shorts, probably well above $1 to actually start squeezing out shorts. But something to watch for is actually short interest decreasing, because that indicates that shorts are starting to get squeezed out, and that could be the beginning of a big squeeze. So we'll see what goes on with that. It's not a guarantee, but it is something to watch out for, a potential situation. In addition to all of the catalysts that we've got for CEI, there is one final thing. Biden pauses new oil and gas leases amid legal battle over the cost of climate change. So this is just a little story. I don't know if anyone was keeping up with this, but basically a federal judge has decided that Biden can't use higher cost estimates for climate change. So basically a higher cost for carbon put into the atmosphere when making estimates for, how much they should charge for new oil permits and whatnot. So it's just a little bit of an issue. Basically, Biden is putting a pause on new oil and gas plants being opened up. So we're going to see what goes on with this situation, but it's also coming out today that this is happening, and is not necessarily great news for the price of oil and gas. It could be great news for the price of CEI. You could expect to see CEI potentially moving up because of this as well. Because if there are no new leases going for oil and gas, then we can expect to see a smaller supply of oil and natural gas, and thus higher price, which in turn could lead to a higher price for CEI stock. So these are the key things that I think you should watch for. We've got 1, 2, 3, 4, 5, 6 of them. So feel free to jot them down, do whatever you want to do. Also, feel free to subscribe to the channel, and keep in mind, none of this is financial advice. I'm just letting you guys know some of the news that CEI stock has going for it. And if you guys appreciate that, feel free to subscribe. It would be much appreciated. Other than that, guys, have a great day. I'll see you in the next one. Bye.